Gone are the days of 3% interest rates, which means a cash flowing rental property or being able to live for free is a thing of the past. Or is it? Many investors have been leaning towards this new type of strategy called the co-living strategy, but here's the thing, it's actually been around for decades. It just has a fancy name now, and people are hyped for the return on investment numbers. I mean, when you dive into it, it's kind of insane. Let's dive into the co-living strategy and why people are so hyped about it. Alright, first things first, let's talk about what it even means. What is the co-living strategy? And even last year, it was just called something different, the rent by the room strategy. I think investors wanted to really change the name because of the negative connotation, possibly, but nonetheless, the idea is you rent out each of the rooms for a certain amount per month, and when you have more bedrooms, you get more income. But it's a little bit more complicated than that, and I'll get to that later in this video. First, we have to talk about why people are now super interested in it. So when you're investing in real estate, whether you're a house hacker or you're looking to just find an investment property or a vacation home, we have a couple of ways to invest in real estate. You have the long-term, mid-term, and also short-term rental strategies that come to mind immediately. Long-term investing is where you have this one lease agreement signed for the whole house, and usually it's the least profitable strategy. And when you're talking short term, it's when you have guests stay in furnished homes for weeks or days at a time. Think of, let's say, Airbnb or Vrbo. And then the midterm rental strategy is where you have furnished places for people to stay for more than 1 month. Think of like Furnished Finder or Facebook Marketplace. And nowadays, even with these strategies, it's tough to have the potential rent break even with your expenses. Or in the case of short-term rentals, there's a lot of metropolitan cities that are cracking down on the platform, or it's just too much competition and it's hard for guests to choose your home. Real quick, before we continue, if you're thinking about moving to the Denver area, I have a 100% free relocation guide. Here, this QR code is right here, will take you right to it. Like I said, it's 100% free. It takes you to the biggest employers, the hospitals nearby, and also some of my favorite food places, and it gives you a good introduction to the Denver area. Make sure you go check that out. Like I said, it's 100% free, and I want to make sure you're making the right decision in where you want to go and also how you want to go about it. So if anything, you can also hit me up. All my contact information is down below in the description. Yeah, like I said, all free, lots of good stuff right there. Make sure you go check it out. And that is where the co-living strategy comes in. I mean, renting out 6 bedrooms at $900 per month means you're generating about $5,400 per month in revenue. And because renters stay for longer than 1 month, you're not subjected to short-term rental laws that are being ban-hammered by the governments of bigger metropolitan cities. So you get less volatility, more cities and neighborhoods open to the strategy, and maybe you see why the co-living strategy is becoming more popular with real estate investors. And this strategy is not only popular with real estate investors, but also people who want to live for free. I guess if you want to get technical, they are also real estate investors as well. And by that definition, I'm definitely a real estate investor. Real quick question of the day here. I am curious if you've even heard of the co-living strategy, and make sure you put it in the comments below whether you have or you haven't, because this is a relatively new term, especially in the real estate industry, in the investing industry as well. So let me know in the comments below if you have heard it already. If not, I mean, you're not alone. There's hundreds, if not thousands of people who have not heard of this strategy yet, and I am here to guide you along the way. And for those people who want to reduce their living expenses to zero or close to zero, according to the Census Bureau, between 2017 and 2021, over 40% of renter households spend more than 30% of their income just on rent. And when you fast forward to now, 2025, I'm sure it's more than 30% of their income going to rent, maybe even 40 or even 50%, depending on where you live. Now imagine if you kept the 40% instead of paying it to a landlord or paying your mortgage in full, or what if you had other people paying for your mortgage instead? And that is the power of the co-living strategy. I mean, people coming out of college are already used to living with roommates, and you might as well keep up with that lifestyle, but now get paid to live with renters instead of paying to live with renters. And with the co-living strategy, you not only get paid to live with renters because they're paying for your mortgage, but you also get the benefit of equity gain of owning a home. And speaking of benefits, the benefits aren't only just about the lower monthly payment for the living expenses. You can add some more value in the home, not just by increasing the monthly payment or increasing the amount of bedrooms in the place, but also the appraised value of the home as well. Investors and house hackers are finding ways to include another bedroom or even 2 bedrooms to increase the value of the property to compare itself to higher value comps. And if you're interested, I have certain tips and tricks to find homes that you can add another bedroom, thus increasing its value and monthly income at the same time. And let me know by hitting me up. All my contact information is down below in the description. I'd love to help you out in that regard. So this is the main reason why that co-living strategy is just becoming so much more popular, because of the numbers. The numbers are actually pretty insane, even in this economy and this interest rate environment that we're in. So let's say you buy a 4-bedroom, 3-bath home for $500,000 in the city of Denver. A mortgage on a $500,000 home, including taxes and insurance, when you put 5% down payments in the city of Denver, your mortgage is looking at about $3,500 per month. And in that 4-bedroom, 3-bath place, let's say you live in one of the rooms and you rent out the other 3 bedrooms, and those 3 bedrooms are generating each $900 per month. $900 times 3 equals $2,700 per month that you are making per month. So when the mortgage is $3,500 and the rent that you're collecting is $2,700, congratulations, you're living for only $800 in that home. But wait, it gets even better. What if you found a 4-bedroom, 3-bath home with the potential to add 1 more bedroom, and that same home can now be worth $550,000 or even $600,000 because you're no longer comparing that 4-bed, 3-bath home with other 4-bed, 3-baths. You're now comparing a 5-bed, 3-bath home with other 5-bed, 3-bath homes. Hey y'all, real quick, as much as I love making these videos, there's only one thing I love more, and it is making sure that you're moving to the right neighborhoods and you're making the correct move over to the Denver area. And I love helping out families. I've helped countless families move over to the Denver area, and I want to make sure that you're making the right move as well. So if you're ever curious and want to hit me up, all my contact information is down below in the description, just right there, maybe like a couple inches down. Make sure that you hit me up. You can set up a Zoom call with me. You can text me. You can even call me if you want to reach me. So looking forward to it. I want to make sure that you're making the right move. So just by adding drywall, a door frame, and maybe some electrical to put up some walls, you're increasing the value of your home by, let's say, $50,000. Of course, results may vary depending on the neighborhood, the condition of the home, and things like that. But of course, back to the co-living strategy, the additional bedroom means you can earn another, let's say, $900 per month. So putting things all together, let's say you improved on the home and now you have a 5-bed, 3-bath home. You're living in one of those bedrooms and you're renting out 4 bedrooms. 4 bedrooms at $900 per month means that you generate about $3,600 per month and your mortgage is $3,500. Congratulations, you are living for free. Of course, there will be things that break or vacancies in those rooms, but even if you set aside another $800 per month just in case those bad things happen, that's all you have to pay out of pocket to own your own home, and you've increased the value of that same home by, let's say, $50,000. It's crazy how co-living has changed the game in both house hacking and investing, but I merely scratched the surface of its possibilities and how to navigate the strategy. There are obviously pros and cons to the co-living strategy. There's a lot more management that goes into it. When you have a lot more heads under one roof, the chemistry could be bad or could be good. It depends on how you manage the property. But all in all, I am a believer myself. I have had renters live with me while I house hacked, and I've worked with a bunch of clients that have lived in one of those, let's say, 5 bedrooms and have accumulated, let's say, $3,600 per month. in their home, and they're basically living for free and owning that property for years to come so that appreciation can work with them instead of against them. So if you're looking to invest in real estate and find a potentially cash flowing place, or even try to live for free in the Denver area, all my contact information is down below in the description. Hit me up, call me, text me if you want to reach me. I would love to help you out like I did with dozens of other clients and people all around me. So that's it. Thank you so much for watching. I truly appreciate it, and I'll see you guys next week.